The question today with Tesla stock is, should I stay or should I go? We review a number of options related to the fact that Tesla stock has done extremely well over the last 3 months and review some thoughts on should I stay or should I go is the focus of our show. We also have our usual health tips, and we also have an interesting follow-on, which is what will Tesla do with its huge cash pile relative to upcoming earnings? This is Greg for Teslafaninsight. Thanks once again for joining. If this is your first time, welcome. If you're a repeat visitor, welcome back. So the first part of our show, or also wanted to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. We're also working on show upgrades of equipment, as you can see the screen behind me, and other improvements to make it a better show for all of us. So I wanted to, today's show really focuses on the fact that, I'm going to turn on my extra light here. Today's show really focuses on the fact that Tesla's stock price was closing on $500 yesterday. Today it's the 10th of January, 2019. And the question is, like I said, should I stay or should I go? The problem that came up is there's an interesting question, and that is that right now we had a note from one of our viewers a couple of days ago where I said the next run for Tesla would take it likely towards $1,000 a share. And he was like, well, we're in this run currently. And yeah, that's a good point. But the problem is that, first of all, when you're in a short squeeze, everything that's going on is happening in a very short period of time and happening very quickly. And the money that's driving that is available, and the circumstance that's driving that is available for a short period of time. So either you get up to these giant numbers that you can base fundamentals on, or you end up with the stock price kind of falling back down to something that resembles what's called fundamentals. And so what we implied and were suggesting yesterday is the fact that Tesla's done well. A lot of people have made a lot of money. The challenge, though, is that when you look at the fundamentals of earnings, revenue numbers, realistic growth numbers, all that stuff, the stock is really supposed to be someplace around 400, call it 420, maybe 430, maybe it's 380, 390, someplace like that. So now that we're at 500, it could go to 600, it could go to 700 right away, all possible. But the higher likelihood is that, I want to call it, the big dogs tend to eat. And what I mean by that in this case is that 60% of shares are held by institutional investors. The rest of the shares are held obviously by individuals and non-institution investors. And so what actually happens is the fundamentals that they use to evaluate stock prices, things tend to roll back to that over time. So if you know what those are, you tend to sort of get a sense for what the basement is for where the stock might move. So if you look at all of the analysts, there's the positive and the negative ones. The negative ones say Tesla's a $200 stock. The positive ones say Tesla's about a $370 to $400 stock. And so what this does is it kind of allows people whose jobs are on the line to have a general number that they have in mind of what they want to pay for this. And they're going to stick with that unless they're forced to because you're part of an industry or something like that. So this is why we feel like sort of the basement of this whole thing is the value investors among the large institutions are looking for that number. If they can get it for 420, they're thrilled. 400, even better. But we think that that's kind of where the basement is. And if they got to pay $500 a share, there's like, let the hedge fund guys do that. They know what they're doing, but we're not doing that because we could lose our jobs. And one way you can assess this is there's actually a list of analysts and what their forecasts are for the stock. And only recently have a few taken the bite and gone over 500, 515, 525, 535. That's like 3 entities or individuals. Most of the folks are collected around $400 plus or minus $20. And there's still a collection of folks in that 200 they're going out of business department, which is, I think, been totally discredited. But I'm still stunned that they're sticking out down with those very, very low numbers. I wanted to take a sidebar note to note that we always enjoy hearing from you guys around the world as you listen to us. And for some reason, there's a whole bunch of things going on at YouTube regarding child safety. And that's why we're not able to communicate via messages in here. But after the show, you're able to leave comments, and I'll respond to those and continue to work with Google to figure out how to get comments during the show kind of reignited. So in our should I stay or should I go, there are a bunch of options you have in terms of what you should do with your stock at this point. So what happened is the stock fell about $20 yesterday. It's pre-market up maybe $4 today, and it's supposed to, in theory, that's kind of what it should do. But it like I said, it could stay the same. It could go up. It could go down. Any of those things are possibilities. What we think is the institutions tend to win in the end. So we kind of feel like that collecting point around $400 is kind of the neighborhood we should expect. So I deliberately made this show and topic because this introduces one of the most difficult part of investing. And that is, if you've made some money, do you take the profit off the table so you don't give it back? Do you stay where you're at and hopefully it gets better? Or do you double down, buy more right now? I mean, there's other options. I was really thinking, should I stay as in the stock, or should I go, which is to sell it? And those are kind of the interesting points. I also wanted to mention to you that if you look at one of our shows before Christmas, we pointed out that with the numbers known after the new year from Tesla's production, it was going to cause the stock price to do some very, very dramatic things, as in up. We also pointed out that you're going to have to make some hard decisions about what to do with your money. Do you take your profit or not, and expect that big move, which obviously occurred, and we're kind of in it to some extent still. So we wanted to sort of study or review what those options are, and sort of maybe add something else to the mix that you might find useful, or that we would definitely find useful if we were in that situation. So one is, obviously the first one, you're up to 500 almost, you made a lot of money. One option is just stay, which is don't sell. So does that make sense? Absolutely. And are you good to go if you feel Tesla's story is still solid, which you think it is? Your staying is all good, there's no problem there. Where the pain comes in is when that thing goes from 500 to 400, and in theory, you just lost 20% of your value that you picked up already. And now you're kind of waiting for it to start to make another run so you can recoup what you feel like you just lost, that you just got. And so that's, I think, kind of a painful little piece, because you're like, oh man, I could have kept my money as opposed to giving it back. And it's a legitimate issue and challenge with ownership of volatile companies like Tesla. So I don't think it's a bad option to hang on to it, because I think the reason why it's moving so quickly up, all the ingredients are still there, so it's not a bad idea for you to stick around. The next question is, should you sell? Now, that's a very interesting question, because if you do choose to sell, you now have an interesting point where you are going to collect some profits, obviously. And now you're sitting in the position of, okay, I just sold, but I still want to be in. At what price point do you try to buy back in versus stay out? And if you stay out, what happens if the stock rallies dramatically and you kind of missed out on that gain? Those are definitely possibilities, and you do miss out on them. Plus, you got tax implications for selling the stock at this point. So the sell option can be a good one, because it's never bad to collect profits. But it feels weird when it keeps running and you pulled yourself out of it. But having the discipline to do so, I think, is a really good thing, good idea. Not ever a bad thing to take profits. But it's not a bad idea also to talk with your tax professional to make sure you understand the process of what you're doing when it comes to that. The next thing to think about is what's called insurance. So we've talked about options. And one way to deal with this is that you could, in theory, pick a number, 3 to 5% of your portfolio, and buy what are called puts on Tesla. And basically, what that allows you to do is buy an instrument called an option, or in this case, a put option, that allows you to, in essence, hedge your losses. So as the stock starts to fall, the value of the put starts rising. So right now, a put that's out there that might make some sense is something like a 450 put heading into February, because it gives you some time value, allowing news related to the revenue and earnings to hit. And so if it continues to fall over the next week or two before we start seeing the earnings push on the stock price, you could actually make some nice money on that, making up for any loss that you might have in the gains that you gained on your stock. So if you don't know about options or puts, et cetera, you might want to talk to your financial advisor. There's a lot of stuff online about understanding options. Simplest way to do it is buying and selling calls and puts. And given what Tesla's been doing on the upside recently, I do not think that's a bad way to go. Again, Tesla's stock could go anywhere it wants. What we think is that this thing is sort of headed southbound by 20 or 30, maybe 50 points, because I feel like the short squeeze is over, and we're now starting to get back to the fundamentals of why Tesla is at this point, and then what the future might look like. So in terms of my general comments about should I stay or should I go now, I think we're sort of beat that story to death. The spot we're in now is we're starting to turn perspective towards what's going to happen in February when Tesla announces earnings, A, and B, what are they going to do with that cash hoard that they've developed? So what happened is that we had a viewer who put a question to us, and he said, he made a comment regarding Tesla's inability to maybe reach the numbers that people had a goal of. And we thought this was really interesting because we've actually entered a space with Tesla where we call it corporate cash games can be played. So let's run through some random numbers for you. Tesla's producing, for the heck of it, Tesla's producing, let's say 2,000 cars a week in China, and they're going to delivering those on a weekly basis, even though we know a holiday is going to delay how this all works, et cetera. So what's happened is, I believe it's within 3 weeks of you getting your car, you've got to pay for it in full. Let's add to that, it's $3,000 per car to reserve one. And by our count, there's 100,000 people waiting in line for that lowest cost Model 3 that's being made in China. So one of the numbers that's lurking out there is 100,000 times $3,000. So that money is sitting there in the account for Tesla, and they can sort of use it to play around. The second thing is that Fiat and GM, for example, aren't meeting their EV sales goals, so they have financial penalties. In 2018, the number was $300 million they paid. For 2019, we're going to find out what that number is at the next earnings. So there's this little $300 million that's just popping up over there, possibly on the low end, but it's probably actually higher now. So then we have deposits on the Cybertruck. That's a low number, 100 times 250,000 people. We have deposits for the Semi. We have deposits for the Roadster. What I'm getting at is that one of the metrics being used to evaluate Tesla is how much cash do they have on a balance sheet against what their liabilities are, and can they meet the obligations? So they kind of have about $10 billion in debt. Now they had $5 billion and made a profit, and now they've got more profit. So in theory, Tesla could actually show $6 billion on the balance sheet at their next earnings announcement, and they have $10 billion of debt. So yeah, they could go out of business because of the debt, but it's a low likelihood given they could sell stock or they could pay off the debt with the cash they have. They have all these options that are lurking out there. So the reason I'm choosing to dive through this is that Tesla's going to let us know what their earnings were coming up, and they're going to also bake in the other aspects of the balance sheet. And so even if you add things like deposits on solar roofs that they've now started installing, there are all these different ways in which Tesla has money coming out their ears, and they can reclassify or classify that money in many different ways to sort of make a statement about what's going on. And so when it was suggested that their cash situation might cause the stock price to go down, I was like, wow, I definitely think that's possible. But based on what we just saw them do in the last quarter and what we see coming up in terms of new cash infusions, I think it's quite awesome. And so, so I wouldn't put it past Elon, based on how he likes to handle the hedge funds, that he will do anything possible to deliver a brilliant number, and a number that's beyond what was expected by Wall Street, deliberately to go get the shorts. And so the first part of that process is exceeding the number that was expected production-wise. But if you want to get a feel for what the number is, the average price of a car a Tesla is selling is $58,000 times 112,000. And that gives you a general ballpark of what the revenue number is going to be that they're going to announce. And you can compare that against what analysts were expecting to determine whether or not they'll meet or exceed. The fact that the stock price is at the level it is now and the run it's made since the January 3rd announcement makes it very clear this is at or above what was expected by analysts. And then now they've got to start adding in all these other cash locations that I talked with you about to really assess where Tesla's at. So the bottom line is this. I don't think there's any chance possible that they'll miss on the number that was expected. In fact, I think Tesla will use its cash capabilities to turn a profit, as well as show cause on the balance sheet with the money they have why they're doing great. And they definitely don't want to and aren't allowed to sort of telegraph what's going on. But this is kind of, we feel, the state of things currently. The next thing that we wanted to review is that our next show that we've been preparing for a while, and it hasn't worked out with the new equipment in terms of execution quickly, is there's a backward question. We got a comment from a gentleman named Paul who lives in China, and he explained that the average sale price was $15,000 for their 100-mile EV vehicles in China last year. So he was sort of backdoor presenting a question of how can Tesla do all these big numbers in China if you have basically $15,000 cars that's the gut of the market there. And so that's an excellent question. So the excellent answer is going to be Tesla, to some extent, articulating how many vehicles have been reserved and therefore how many have been sold, and that'll answer the question. The first part of the answer to that question we wanted to share is that China has made some big changes about what they're going to allow to go on the streets there. In particular, EVs have all kinds of great ways that they're going to be allowed to enter the Chinese market. But if you're a non-EV vehicle, there's going to be high tariffs or high fees associated with it, as well as long waits for people to be able to get those cars on the road. So it's really forcing domestic and international manufacturers to develop strong capabilities when it comes to EVs in order to be competitive as we move forward. So this really illustrates the fact that sometimes the backward numbers really don't tell you what the deal is, because if you're really rich and you have a choice between a bus, walking, or buy an EV, probably from Tesla, I think that, folks are making that choice, and we're going to see how those numbers play out. The other footnote on this, prior to us getting deep into the other show, is just the fact that, Elon is talking about 500,000 vehicles a year coming out of the China factory. And especially with the Model Y coming, I think it's a no-brainer he'll get there. The fact is that if, there were 50,000 cars available to be sold in that space for Tesla, they wouldn't be building 500,000 car capacity heading for 3 or 4 more factories. So one of the ways to really crush the shorts and make life miserable for others is being coy about what are the real numbers behind how many vehicles Tesla has that's sitting behind that are ready to come forward. So we look forward to updating you as we get more info on this. And I think it'll be lucrative for Tesla and for everyone else. any rate, we've reached our usual show length, and I wanted to, prep with our sort of early China demand evaluation process, and we'll bring that in our next show and look forward to sharing that with you. Wanted to encourage you to like and subscribe. We're on Patreon. We actually have our PayPal link there as well. Could use support. Also wanted to remind you that we're really grateful for folks who pitched in for our goodies delivery to the local production facility of Tesla. And we're probably going to make that at least a quarterly event. And we will be doing more healthy stuff. So if you're mad at us delivering unhealthy food, we're going to definitely step up to offer healthy and unhealthy so that employees can make their choice. And I think it's good that you guys are keeping an eye on that. I want to leave one last question because we have a decent number of people from Germany who view our show. And I just want to leave with one last question, and that is, if you're trying to save the planet, why are they tearing down so many trees to build the new gigafactory there and disrupting the habitat for wolves and other animals? And why not just build it someplace where there's an existing factory where you don't have to do that much damage and, tree rip outs, etc. And that it's above my pay grade, I think, to answer that question, but I think it needs to be asked because it's sad to see all those trees and nature destroyed for a factory. And it'd be nice to see some way to relocate those trees so they still have their carbon impact, et cetera, versus just a cut down, tear down program. Just a reminder on our health tips, don't forget 25 leg lifts for a leg to maintain the quad muscles. Don't forget, consider a 5-2 diet or some of the other fasting diets for mental health addition. Also wanted to encourage you not to go to bed within 2 hours of eating, preferably 4 hours to allow the food to digest. We also wanted to encourage you maybe an instrument or going dancing once a month as a way to, again, work on sort of mental health issues. At any rate, we look forward to your comments at the end. Please take time again to like and subscribe. This is Greg for Teslafaninsight, and we always welcome constructive input in terms of how to execute better. And please leave your comments below and we will respond. Have a great day and bye for now. Tschüss in German, au revoir, French, lehitrot, Hebrew, Choda Hafez, Farsi, Hejdo, Swedish, Zdravstvuyte, Russian, Namaste, I guess, Hindu, and then Zdravstvuyte, Russian, we did that one already, Ni hao ma, Chinese, and in Jamaica we say, Nof respect, walk good man. Have a great day, bye for now, and thanks for joining us.